Hi, I'm Jeff Wood. I'm a principal with Alexander Group and co-lead our FinTech practice. And I'm joined here today with Brent Carter, a director who's here to talk about some of the key trends that we're seeing in the FinTech space relative to compensation. Brent, thanks for joining us today. A couple of key questions just to start out of what you've been seeing recently. Um, how are you seeing firms in this space where they have a very product or GM-led organization maintain focus in sales compensation where they just don't make things too complex if they had many products?
Yep. Thanks, Jeff. Yeah, some of the trends we're recently seeing here are that when you have a GM and product-led organization, you've got a lot of different objectives that are trying to be pushed to the sales team. And the way firms best mitigate and best manage to that is by really keeping a structure and a governance process in place to ensure that the GM leaders are only allowed certain components in the plans, and that we don't end up with situations where there are 25 different things for sellers to focus on, in which case it allows them to kind of pick and choose their desired objectives and desired outcomes, which then does create misalignment between firm and company objectives and ultimately what sellers are trying to do from the ground up.
And Brent, that can vary, I guess, depending on the life cycle of the organization. If they're more early stage emerging company where they've got two or three products, I'd imagine they probably have different issues that they're probably going to wrestle with than if they're more mature with a platform and they have hundreds of SKUs. Can you talk a little bit about kind of how you see that or what some of those problems are if you have hundreds of SKUs versus maybe you have two or three?
Yep, when you start to get a proliferation of SKUs and focus areas there, you end up having situations where firms will want to try to make sure they pick the two or three most important things that align back to this year's corporate objectives, align back to the firm's growth strategy. And so being very clear with the sales team around what the real important things are. But there's also considerations and levers that companies can pull to make sure that we don't overemphasize or overfocus on things, but make sure that we balance that between what's most important for the company, what's going to drive behaviors for the sales team, and what's going to ultimately create value for the organization as a whole.
Right. Thanks, Brent. I know one of the things you and I have seen over the years with a couple of clients is it really helps if organizations can make sure that their C-suite and executives are very aligned on what's the difference between strategic products that need to be emphasized versus, how do we peanut butter spread prioritization, right? So having that kind of stacked hand leadership on where to focus really can help simplify and streamline so that comp is more focused. Related to that is to kind of pivot to maybe one of the other key issues that's a common trend here. Can you talk a little bit about how companies are thinking about balancing revenue and profitability within the organization and their comp plans today?
Yep, that goes back to a project you and I worked on together where the company made a pretty big paradigm shift between year one to year two, where they were entirely revenue focused one year. And then the organization said, you know what, we really care about profitability this year. And so the sales comp plan had a bit of a whiplash effect where sellers for years built pipeline focused on revenue, thinking every dollar was green for them, and not really focusing on what was most profitable for the organization. So when that sales comp shift happened, the organization ended up with a bunch of pipeline, a bunch of sales teams who are generating low margin but high dollar products. And so from a comp standpoint, it's being very clear about the transitions and the emphasis on what's the desired outcome for the organization. When you have those big shifts, it's imperative that we really balance in the comp plan both objectives to make sure that the sales team is filling the top of funnel with high value products, but also high dollar products to make sure the company meets both top and bottom line goals.
I know one of the things that can happen if you have a product portfolio where there's a very significant difference between, call it, the revenue value that a product delivers versus the margin value, and you're using different measures overnight, to your whiplash point, if you were to change immediately, you can actually create a huge swing in sales behavior, possibly unintentionally in some cases, where all of a sudden your pipeline may immediately shift away from some products where you've actually over rotate and your pipeline is not balanced. Can you talk a little bit about that, or maybe some things that you've seen or things companies can do to avoid that as they think about compensation?
Mm-hmm. Yeah, when those big shifts happen, which again that they may based on corporate level objectives or market trends, but from a sales comp standpoint, what we want to make sure is that the comp plan tries to really create that balance, which is when we have an organizational goal shift, that the sales team is focused on the right activities, the right outcomes, Because what can happen, to your point, Jeff, is we make a shift from revenue to profitability as the gold standard within the organization. And so sales team members might say, okay, you know what? I'm going to go out and generate the most profit margin that I can. But if I'm not still focusing on products that create large revenue dollars, so it's more about the the quantity of revenue dollars, more so than any percentage points or marginal gains around there. And so making sure that sales teams are still generating the right dollars and the right outcomes from that standpoint.
And I know one of the things that we really stress to clients or and folks that are asking us about this when we're talking about this in briefings, one of the things that they got to be prepared to do when they're facing this is they're going to have to really make sure that they have a team available, or that they do a deep dive analysis on scenario planning and modeling to understand what the impact is, not just to the seller, but expected impacts to the organization as you begin to rotate and shift from revenue to margin or balance it, depending on the direction that you're going. Let's shift a little bit. We know it's fairly common in FinTech. It's not always the guiding rule, but there'll be bifurcated coverage models, right? So you separate, and you have hunters, and then you have farmers. And, that works for much of the market, but it's not always going to be the case in every situation. You really have to look at the strategy and the market that they're in. Brent, can you talk a little bit about what you're seeing with hybrid deployments and how that impacts coverage and compensation?
Yep. So a lot of organizations will have pure hunter teams, will have pure farmer teams, or some balance between those two. And it's really down to what territory the seller owns, what customer set, what sub-segment they're focusing in on. And so when you have situations where you're trying to drive consistency and simplicity in the comp plan, but also trying to manage across those hybrid deployment differences, there's situations where one size fits all plan is not going to end up driving the right behaviors. And so in order to balance simplicity with specificity in what a salesperson's paid to do, there's a lot of levers organizations can pull. What ends up being an easy thing to do is consider SPIFs, but that creates a lot of downstream implications and a lot of confusion and misalignment of dollars and objectives. And so what we've seen a lot of organizations do in this space is be very clear about what the primary measure in the plan is, what the right objective for the salesperson to drive to is. And there's a lot of other levers that organizations can pull to provide additional credit or to provide additional focus in certain areas when maybe one territory is more greenfield than another's, but still allowing those two people to have the same comp plan structures for simplicity. The implication of that is that we have to be very clear from an organizational standpoint on what the right quota setting methodology and rigor is to ensure that we don't have overpayment or underpayment in situations where attainment ranges do differ.
Those are great points, Brent. And SPIFs can be very powerful. And a lot of companies, and certainly sales, often loves the SPIF programs. But to your point, you can't overuse it. You can't let it cannibalize your core plan and the true sales behaviors that you're trying to drive at the core of the plan. So you have to have the right budget. You have to have the right, call it best or market practices that you're following to make sure you use SPIFs the correct way. If anyone is interested in that, AGI, we see this quite a bit. We do have a briefing that's available on, SPIF best practices. So if you're interested, feel free to reach out to us on our website and contact us. We can make sure we can give you a briefing on, SPIF best practices and what do you think that right balance is, so that you don't cannibalize that plan. And, the actual SPIFs you use will of course vary, but there's some certainly guiding principles we can provide. And then in closing, I'd just like to say, if you come to our website, if you have questions on sales compensation, if you have questions around a briefing topic that you're interested in, feel free to reach out to us. We're more than happy to have a comp expert or a team sit down with you for 20, 30 minutes, talk about your specific issues and what you're looking at, and happy to cover any briefings and questions that you have. Brett, thank you so much for your time today. We really appreciate the insights.
Yeah, thank you, Jeff. It was good chatting.